Good morning, everyone. It's Ben Buckner and Dan Botsy with Ag Resource in Chicago joining you. It's Wednesday, October the 1st. We've got ag markets lower. We've got another negative outlook. We understand that maybe these are not as fun to watch, the sort of general pessimism in the market. But just wanted to start by saying, all we care about at Ag Resource the last 30 years is helping farmers navigate the landscape of the markets. And as we'll kind of touch on, the USDA's September stocks report was kind of outright bearish of corn, this year, maybe next year as well. So that is kind of locked in basic arithmetic. And again, all we really care about is navigating this stuff. And so we could be, critical of USDA. We can lower our corn yield estimate, but does that help you manage your risk? So we are still concerned about some things that Dan's going to touch on here. But just be prepared, like we've talked about the last couple of weeks, to make some moves as we see recoveries. There will be recoveries at times. Just we do think that the structure of the grain markets have changed, and maybe for a lasting period of time. So, with that, I will pass it off to you, Dan. Break down what you're seeing this morning.
Yeah, Ben. Well, thank you. Yeah, we at Ag Resource do not like to be perma bears, and I'm going to back up this slide set here. So we'll go to the beginning. We are not perma bears. We are just here following our numbers, and the data, unfortunately, is fairly clear. I mean, if we think back to the August crop report, the USDA found between August and September 3.5 million acres of corn, and now yesterday they found 200 million bushels of corn. So putting it all together, that's 850 million bushels. And now we have a record large corn crop that'll exceed 16.4 billion bushels. So I'm talking in this regards to the three bears. I'm kind of mimicking or making fun of Mama, Papa, and Baby Bear, but it's kind of what we have here today. So Papa Bear is that record large U.S. corn crop that is out there and will come in and will strain storage and will strain the logistics and cause us problems as we get to the end of October, early November, in trying to find cover for all of that corn. Mama Bear, if you will, is that world wheat exporter supplies are up 28 million metric tons or 1 billion bushels greater than last year. So, think about that. That is bigger than the entire Argentinian wheat crop, maybe, 2/3 of the Australian wheat crop. So it's a large cache of wheat. It's likely to even get a little bigger on the EU, Australian, and Argentinian crops should good weather continue. So as we think about the wheat market, it's just oversupplied. I would use the term, the world is awash in exporter supplies of wheat. And then on top of all this, we have geopolitics, and this is China's purposeful, and they're doing it on purpose, avoidance of U.S. soybeans and grain as a negotiating lever within the trade talks. And so when you look at China's importance to the United States, 825 million bushels of soybeans bought last year, nearly 900 million in the year prior, it's accounting for nearly 50%, 50, of U.S. soybean exports. So it's important to look at Mama, Papa, and Baby Bear and really understand why we're here. Again, we did not conjure up this. This is what the market has given us. And now the market's job has changed to building demand longer term and trying to find a place for all of this grain and getting China to take more. I'm really concerned longer term that China is becoming a diminished importer of grain. And we do have to find either India or countries in Africa to really supplant and take their place. Yesterday afternoon, we did have, of course, a briefing that was held with Republicans. It was with David Perdue, the ambassador to China from the Trump administration. As he met with lawmakers, they all kind of left very uneasy. They left uneasy because Mr. Perdue indicated that there is not a nearby trade deal, and it's unlikely that China will restart soybean or grain imports from the United States anytime soon. Last week, we advised you that China has virtually bought most of its needs in November from Argentina. Last week, nearly 3 million tons of beans. Now they're on the hunt for December. And with Perna, and now it's 26% planted in southern Brazil, that soybean crop there will be harvested in late December. So that means that the window for the United States is getting smaller and smaller. And there's some of us that are even wondering if China will show up as a buyer in the 25-26 crop year. That means that our export estimate at Ag Resource for soybeans today at 1.39 billion bushels may have to fall something like 1.3 or 1.25. So again, the pile of beans along with the pile of corn and the pile of wheat gets bigger because of China's absence in the U.S. market. Turning our attention to yesterday and thinking a little bit about the feed and residual, this is where feed and residual actually came out at 5.44 billion bushels. You can see here is well below last year and the record highs looking backwards to 04, 05. Nonetheless, it was a disappointing feed use. Whether last year's corn crop was underestimated, whether it was the amount of cattle that are stuck on the wrong side of the U.S. border, whether it was that sorghum figured into the feed ration a little more, I'm not sure. We won't get that breakdown. All we know is that 5.4 billion bushels, USDA's new crop feed and residual estimate at 6.1 billion bushels is way too high. So we're going to take a hit of 200 and 250 million bushels in old crop. We're also going to take a hit of about 150 to 200 million bushels in new crop. So when you add it all together, this continues to increase the U.S. corn supply. I've got way too many numbers on this corn balance sheet here, so I put this a circle there so that you can focus in. You know, we see even with smaller export numbers and a U.S. corn yield of 185, we come up with end stocks in corn, you know, in the vicinity of, 2.67 billion bushels without China. If we do get China back by some happenstance, I'm not positive about that, we'd look at 2.57. This gives us average cash prices for the U.S. farmer on a farm gate level that are 350 and 375 a bushel. So if you think of where the futures market is, subtract your normal basis, we are probably way too high. December corn needs to come back and put something of an upper 3 or lower 4 in front of it so that the market can do its job in terms of building demand and finding cover for all the corn that's out there. We will focus on new crop balance sheets for 26, 27 forthcoming, but at least today I want you to be aware of big corn supplies. Let's call it 2.4 to 2.7 billion bushels of corn. That tells us that potentially the corn market could test its lows or even score new contract lows if we think down the road. Lastly, we'll talk a little bit about China in the corn market. We talked about them in the bean market. When you look at China, it really ended its imports of U.S. corn back in June of 2024. The corn market, nor some of these markets, should not be surprised by China's absence. China is a much smaller importer in the world corn market. USDA has them plugged in for 10 million tons. Last year they did about 7. I would expect this year's number to be closer to 5 or 6. So we don't think China will be a big importer of world corn just because their farmers are suffering through the same unprofitability that EU, US, and even portions of South America are seeing here today. So don't look for China to be a big buyer of world corn anytime soon. Lastly, we'll finish up here because with all of that bearish news, we got to keep a focus on South American weather. It is the one catalyst that could change everything and turn it around in very quick order. However, the EU and GFS weather models in the 11 to 15 day period are offering additionality for rainfall across northern and central Brazil. We are wondering if the monsoon is starting on time. It usually comes in about the middle of October, and if that's what's happening in some of the forecasts. We'll update you day to day, but as you look at South American weather, very good weather across southern Brazil, Argentina, all the way up to Paraná. The key is getting that monsoonal rain to return back to Mato Grosso do Sul, and portions of Goiás. Those will be the 3 provinces that will need that moisture forthcoming. So with that, Ben, as we look at the markets, I wish I had something really bullish to jump on here and say, here we go. But unfortunately, we've got more supply. The market's got a longer job ahead, and I think lower prices is the order of the day, unfortunately, as we look forward to an advancing U.S. harvest.
Sure. And let's think about kind of what we think is the reality of markets over the next 30 or 60 days. With the addition of old crop corn supply, lower feed residual use this year and next year, the October WASDE coming up, what yield can you plug in to turn this around? We think even a 180 still keeps the job of reducing acres, finding demand. It's very, very difficult to change the U.S. corn balance sheet. And that's what stuck out to us yesterday. Secondly, in Brazil, it's just very hard to prevent the monsoon from showing up. So we will monitor the timing of that. And it is very important. But like you said, it does look like a pretty normal start to the growing season there. So with all this said, we're still thinking about December 26 corn at 460, January 27 beans at 1060. I don't think it's unreasonable to expect December 26 Chicago wheat to test $6 at some point in the next 3 to 5 months. Those are the targets that we're looking at, because if nothing really changes, Chinese trade, weather is normal, we're going to redo all of this again in 12 months. So that is, I think, what we want to communicate to the farming community. So with that, all the best in the markets, and we'll be back tomorrow with more information. Thanks.